Something big is happening quietly in the market right now, and most retail investors are completely missing it. While headlines are screaming about crashes, bubbles, and the death of big tech, one of the most closely watched investors in the world is doing the exact opposite. Nancy Pelosi has just revealed her 2026 playbook, and if you know how to read between the lines, it tells us a powerful story about where smart money believes the next wave of opportunity really is. Today on StockOra, we're breaking down her bullish 2026 buy list, what she actually did, why she did it, and most importantly, what retail investors like you can realistically learn from it. Before we get into the stocks, do me a quick favor. If you want calm, smart, no hype breakdowns of the stock market, AI, and long term investing ideas that actually make sense, hit the subscribe button right now and turn on notifications. It helps the channel grow, and it tells YouTube to show you content that actually adds value instead of noise. All right, let's get into it. Over the last few weeks, the internet has been full of rumors. People saying Pelosi is dumping big tech, that she's running away from the Magnificent Seven, that she sees a collapse coming. And on the surface, if you only looked at the headlines or skimmed a trade report, it kind of looked that way. Large share sales, big names, massive dollar amounts. But once you slow down and actually understand the strategy behind the moves, the picture changes completely. What Pelosi did wasn't an exit. It was a reset, a risk management move, a way to lock in gains, manage taxes, and then quietly re-enter the same stocks with even more leverage and less capital. And that distinction is critical. Let's start with big tech, because that's where most of the confusion came from. Apple, Google, Nvidia, and Amazon. Four pillars of the so-called Magnificent Seven. Pelosi trimmed shares across all four, but she didn't abandon them. In Apple's case, she sold tens of thousands of shares, donated a large portion to charity to offset taxes, and then immediately reestablished exposure using deep in-the-money leap call options. That tells us something very clear. She still believes in Apple's long-term growth, especially with the upcoming iPhone cycle and the deeper AI integration coming through Siri. Apple isn't just a hardware company anymore. It's becoming an AI distribution platform. And that matters. The same strategy showed up again with Google. Shares sold, some donated, profits locked in, then re-leveraged using long-dated call options. Why? Because Google sits at the center of the AI infrastructure stack, and with Google's Gemini expected to power much of the back-end processing for future AI assistants, including integrations through Apple's ecosystem, the revenue potential here isn't speculative. It's structural. This wasn't fear selling. This was confidence with discipline. Nvidia followed the same pattern, the so-called kingmaker of AI chips. Pelosi reduced share exposure, locked in gains from one of the greatest runs in market history, and then rolled that capital into leap options tied to Nvidia's future. This move screams conviction. She's not betting on yesterday's chip. She's betting on the next generation. New architectures, new demand cycles, and AI workloads that haven't even fully come online yet. Amazon rounds out the big tech story. Again, shares sold, options added, exposure maintained. The bet here isn't just e-commerce, it's AWS, cloud infrastructure, AI compute, and enterprise demand that continues to grow quietly while the market focuses on short-term noise. Here's the key insight for retail investors. Pelosi is telling us that big tech is not dead. It's not collapsing. It's evolving. And instead of running away, she's choosing to stay exposed while reducing downside risk and improving capital efficiency. Retail investors may not use leap options the same way, but the message is still clear. Quality tech leaders remain core long-term holdings going into 2026. Now here's where the story gets even more interesting. Because Pelosi didn't put all her capital back into high volatility tech, she also made a very deliberate move into safety. AllianceBernstein, a large, established financial services firm. This wasn't about growth hype. This was about stability, income, and patience. By allocating a meaningful position into a high-yield, slow-growing company, she created a buffer, a place to park capital while collecting cash. This is what smart investors do when uncertainty is high. They don't panic, they balance. They let dividends work while waiting for the next opportunity to fully reveal itself. For retail investors, this sends an important signal. Even the most aggressive growth investors understand the value of being paid to wait. Income isn't boring when it protects your portfolio and gives you flexibility, especially in a market where volatility can spike overnight. But Pelosi didn't stop there. And this is where her playbook really separates itself from average investing behavior. Instead of just rolling options or exiting risky names, she made a move that tells us she sees real, long-term value. She exercised call options and chose to hold the actual stock. That's a huge signal, because it means she was willing to shift from a risk-controlled options position into direct ownership. The company? Vistra, an energy company that most retail investors weren't even watching. But energy is the backbone of the AI revolution. And Pelosi knows it. AI isn't just software, it's electricity, massive, constant, uninterrupted power. Data centers don't sleep, models don't rest, and grids are already under pressure. Vistra has something special, a diversified power generation mix, including nuclear. That matters more than most people realize. During extreme weather events, when natural gas systems struggle, nuclear keeps running. Reliability is everything in AI infrastructure, and Vistra has already proven it can deliver power 24/7. Add to that long-term power agreements with major tech players, including Meta, and suddenly this isn't just an energy stock, it's an AI infrastructure play hiding in plain sight. Pelosi exercising options here tells us she's not just trading headlines, she's positioning for the next phase of AI. The phase where AI stops learning and starts doing. And when that happens, power demand doesn't just increase, it explodes. For retail investors, this is a wake-up call. AI winners won't only be software companies. The real opportunity might be in the picks and shovels, energy, infrastructure, companies that make the AI economy possible. And just when you think the story is done, Pelosi adds one final layer, a risk-on bet, a company that blends two of the most volatile sectors in the market, AI and biotech. That's where things get truly fascinating. And this final move is where Pelosi's 2026 playbook really comes together, because it shows us how she thinks about risk, timing, and the future in a way most retail investors never do. The last company on her list sits at the intersection of two worlds that are both incredibly powerful and incredibly dangerous for investors: artificial intelligence and healthcare, specifically cancer treatment. The company is Tempus AI. Now, this isn't the kind of stock that explodes overnight and makes headlines every week. And that's exactly why it matters. Tempus AI isn't built on hype. It's built on data, massive amounts of medical data, DNA, RNA, pathology images, clinical outcomes, the kind of data that human doctors simply cannot process fast enough on their own. What Tempus does is take a patient's unique cancer profile and feed it into AI systems that analyze hundreds of potential immunotherapy options. The system doesn't guess. It ranks treatments based on probability, effectiveness, and personalization. In other words, it helps doctors make better decisions faster. And in life or death situations, speed matters. This is AI doing real work in the real world. And here's the key detail most people miss. Pelosi didn't just trade options here and walk away. She exercised her call options and chose to own the stock. That tells us she believes Tempus has moved beyond the science experiment phase. This is no longer just potential. This is execution. Revenues are growing. Roughly 30% year over year, new AI platforms are coming online. One has already received FDA approval. That alone changes the risk profile of the company. Approval creates legitimacy, it creates adoption, and eventually, it creates scale. Now, let's be honest, this is still a risky stock. AI plus biotech is about as volatile as it gets. Analysts are split. Some say hold, some say buy. Price targets range widely, and that uncertainty scares a lot of retail investors away. But here's the insight Pelosi's move gives us. She understands that transformational companies don't look safe early on. They look messy, volatile, uncomfortable. Analysts don't agree. Price targets move slowly, and the stock chops around while the business quietly improves underneath. That's exactly what we're seeing with Tempest AI. Analysts aren't rushing to slap massive price targets on it, not because it lacks potential, but because the risk is still real. And in markets like this, analysts tend to chase price, not lead it. When the stock moves from 50 to 65, targets follow. When it moves from 65 to 75, targets adjust again. That slow upward chase is often how long-term winners are built. Pelosi isn't betting on next quarter. She's betting on the next decade. And when you step back and look at her entire 2026 playbook, the strategy becomes very clear. She stayed heavily exposed to big tech, but in a smarter, more capital-efficient way. She added stability and income through a high-yield financial firm. She placed a structural bet on energy as the backbone of the AI economy, and she took a calculated risk on a company using AI to fundamentally change healthcare. This isn't random. This is balance, growth, safety, infrastructure, and asymmetric upside. For retail investors, the lesson here isn't to blindly copy trades. It's to understand the thinking. Lock in gains when you have them. Don't panic out of quality leaders. Respect volatility, but don't be afraid of innovation. And most importantly, think in systems, not just individual stocks. AI isn't one industry. It's a wave that touches everything: tech, energy, healthcare, finance. Pelosi's moves reflect that reality. And if you've watched this far, you're already ahead of most investors because you're not just reacting to headlines, you're learning how to think. If this breakdown helped you see the market more clearly, take 2 seconds and hit the like button. It really helps this video reach more serious investors. Drop a comment below and tell me which of these plays you find the most interesting for 2026: big tech, energy, healthcare, or income stocks. I read every comment. And if you want more calm, intelligent market analysis without hype or fear, make sure you're subscribed to StockOra. This channel is built for investors who want to understand the why, not just the what. Share this video with someone who's confused about where the market is headed, because smart investing isn't about predicting the future, it's about preparing for it. I'll see you in the next one. Add to that long-term power agreements with major tech players, including Meta, and suddenly this isn't just an energy stock. It's an AI infrastructure play hiding in plain sight. Pelosi exercising options here tells us she's not just trading headlines, she's positioning for the next phase of AI, the phase where AI stops learning and starts doing. And when that happens, power demand doesn't just increase, it explodes. For retail investors, this is a wake-up call. AI winners won't only be software companies. The real opportunity might be in the picks and shovels, energy, infrastructure, companies that make the AI economy possible. And just when you think the story is done, Pelosi adds one final layer: a risk-on bet, a company that blends two of the most volatile sectors in the market, AI and biotech. That's where things get truly fascinating.